Hey guys, this is my bank reconciliation screencast. So what is a bank reconciliation? A bank reconciliation is a process of reconciling differences in the bank statement and the company statement. The goal is that both statements match, but this is hardly the case. So we must explain what the differences are. There are two broad reasons why we get differences. First is items we, the company, have recorded but the bank has not yet recorded. For example, outstanding checks and deposits in transit. Number 2, items recorded by the bank that we have yet to record. So for example, interest on account, bank charges, and non-sufficient fund checks. There are 3 steps in the bank reconciliation process. First step, reconciling the balance per bank. This is done by adding deposits in transit, which are the deposits that have been made by the company but have yet to be cleared by the bank, and subtracting outstanding checks, which are the checks that have been made, distributed, but not yet cleared by the bank, to give a reconciling balance. Let's look at an example. From this example, we total the deposits in transit on the right and then subtract the total of outstanding checks, which is represented with brackets to obtain the actual cash balance. Step 2. Reconciling the balance per book. This is done by adding the credit memorandum, which are a collection of receivables, collection of interest on notes, or errors made by the bookkeepers. Then we deduct the debit memorandum, which includes bank fees and dishonored checks. From this example, we see we split up the credit and debit memorandum into their own totals and then add and subtract them respectively to obtain the actual cash balance. We should then go ahead and check if this figure matches the previous reconciliation of the bank. Step 3. Record adjusting journal entries. Once a bank and company's balance have been reconciled, then we must adjust the company's book balance to the actual cash balance. These journal entries all involve the same account, which is cash. Based off the balance per book statement, we will know whether to debit if cash increases or credit if cash decreases. We then add other accounts to its respective entries to form the adjusted journal entry. So let's look at this example. In this example, we see that all cash is in all entries. We must also add in all the errors in the company's reconciliation process in adjusting journal entry. So in summary, we have 3 steps. Step 1, we reconcile the bank balance by adding deposits in transit and subtracting outstanding checks. Step 2, we reconcile the company's book balance by adding the credit memorandum and subtracting the debit memorandum. Step 3, we finally record all journal entries to adjust the company's book balance to the actual cash balance. Thanks for watching.